Yeah, thanks, Ali. Yeah, so Parker here, COO and CIO at DeFi Dev Corp, NASDAQ DFDV. And prior to here, I was at Kraken for about 6.5 years on the engineering side, and super stoked to be here. So thanks, Ali.
Thank you for being here. And let's finish with the brilliant and unique Martin, Mr. Ton.
Cheers, Ali. Thank you very much. It's absolute honor. I don't know how I can go after Leia and Parker, but I am. Thank you so much for having me. I'm head of growth at Tom Foundation. Hopefully everyone watching and listening is on Telegram. We are the blockchain of choice of Telegram. There's lots of mini apps. I'm really hoping you are. There's lots of mini apps on Telegram. I think that not a lot of people do actually know that. So you can actually connect your wallet to use these mini apps. Many other things about there, but like DeFi games. So yeah, that's the world of Ton, and yeah, really excited to be here.
Awesome. Sounds like we are already getting started here. So yeah, today we have like approximately 45 minutes to an hour, and we'll be covering different sections. And really the idea is to have a conversation all together to give some perspective to our audience about like the current landscape of the different ecosystems and how on-chain treasury is evolving, perhaps giving like some guidance to institutions that are watching us that wants also to step into the game. So let's set the stage with the treasury evolution. And if I can start with you, Leah, with the first topic. So the crypto treasury management market is literally exploding, and the provision are even more optimistic. I took some numbers here. So from 1.4 billion dollars this year to projecting a whooping projection of almost $8 billion by 2030, 2033. So as someone who transformed Sol Strategy from a Bitcoin focused company to a leading Solana ecosystem player, what fundamental shifts are you seeing in how institutions approach on-chain treasury? I mean, like within the last, I don't know, 6 months, 12 months, I mean, like recently.
Yeah, no, it's a great question. In 6 months, 12 months, we've seen something crazy. Yeah, no, absolutely. And again, a shout out to Parker here. We're the Solana, dads. And I don't know if anyone here knows, but it's really such a small world. I mean, Parker, we actually, share some amazing connection where our CTO was, who I consider our mentor, was Parker's manager back at Kraken. So, very cool. Yet Parker and I are just meeting for the first time. So it's great to be on this panel together. So your question about treasury evolution. So yeah, what's particularly interesting is that, Cypherpunk Holdings, which Sol Strategies was originally Cypherpunk Holdings, was originally established as effectively the first DAD in North America in 2018. So Bitcoin, they converted Bitcoin on the treasury, made meaningful Bitcoin investments in the space. That was it. And it was very interesting. Then you had the ETFs come out, you had MicroStrategy in full force, and it became uninteresting to the market, but a great business. So back last year, when I joined as the CEO in July, we started seeing that the writing was on the wall. There was no opportunity to have effectively at all, exposure to Solana, definitely not in a meaningful way. The ETFs weren't out yet. So we thought that by being the leading Solana ecosystem play, by being that DAT with also a serious, Solana operational business, we were riding what we saw as the first wave. And now I see, to your point about adoption, really we're in this second wave of institutional crypto adoption. So to answer your question, I think the most significant change in the landscape expansion is really from, what was very limited to now true proliferation. Even the three of us on a call, but I saw in Galaxy's report recently, there's over 293 DATs in the world, which is just absolutely insane. So 12 months ago, as mentioned, in North America, you really only had MicroStrategy, MetaPlanet, right, was trading here. We were about to hit the market. But there was this tremendous enthusiasm about wanting that vehicle. And you could see it because there was already ETFs that had, they were being treated as leverage plays. So you had ETFs with, 2x leverage MicroStrategy ETFs. You had inverse products for MicroStrategy and an options market on top of it. But the options were extremely narrow, right? But people were picking those over the spot ETFs. And, the Bitcoin spot only came out, in the United States in January. So again, I'd say that proliferation is, now going from those limited options, yet enthusiasm, to all these options of on-chain treasury plays. And institutions are definitely looking for those yield opportunities. So from Solana to ETH to TON to beyond. And we've just witnessed firsthand that, it's kind of a question of when you talk to institutional investors, registered investment advisors, single family offices, they'll say it really went from, should we hold, this new Bitcoin spot ETF that came out last January to, I think now, does this DAT provide that additional on-chain yield? And do they have the best financial engineering team? And that's just an absolute fundamental shift from, speculation and just starting to enter the market to, definitely sophisticated capital deployment. So I would just say that, that growth isn't just about more money coming in. I think it's what we've seen is it's about smarter and looser money institutions that finally have that tool and confidence to deploy on chain and actually look under the hood at how they're finding extra yield.
Oh, that's very interesting, and that's a very good point. And what I can retain from that is that you really see that there is like more and more sophisticated use cases that are emerging from that, coming from MicroStrategy passive holding approach, let's say, to even using up more capabilities of what blockchain and DeFi can offer. That's a very interesting point. Thank you very much for sharing. So Parker, I would like to have your view on one specific point, and Leah gave like a perfect introduction to this question. So DeFi Development Corp, can I call it DDC? I mean, like to go faster.
Sure.
So you pioneered the SOL per share metric for executive compensation. How does aligning strategy with operational business models change the game for public companies entering in crypto? So the question here, what makes this different from MicroStrategy's passive holding approach?
Yeah, so I think it's fundamentally due to the nature of the asset, right? So with Bitcoin's great, but Bitcoin just sits there. And so the only yield that you can generate on Bitcoin is through this financial engineering stuff, which is still very powerful. But building on Solana, we can generate yield through a variety of methods. So obviously staking is the basic one. Running your own validators kind of increases that. And then there's a number of on-chain DeFi strategies that you can lever as well. And so when you package that all together, you have this kind of organic yield growth story around managing the treasury. And then you can layer on the kind of financial engineering on top to boost those yields there. So going back to the SOL per share metric, we think, and MicroStrategy uses BTC yield, which is just the inverse of that same calculation. But we think ultimately that's the reason that investors are purchasing a DApp, is they want to see the underlying holdings growing on a per share basis. And so, I mean, we could just hammer the market with a bunch of stock and grow the SOL balance sheet. But if on a per share basis, investors are losing capital effectively, it kind of breaks the model. And so we really wanted to circle the wagons around the one metric that really matters most, and everything else kind of feeds into that. And so that's why we've done, executive comp, everyone's comp actually across the entire team focused on SOL per share growth. And we think really that should be the North Star metric for, any DAT. It should be the underlying asset per share growth.
Well, thank you very much for sharing. Very, very interesting point as well. And for you, Martin, I mean, like you have like this with your background, I mean, like coming from traditional banking, I mean, like you work for HSBC, BNP Paribas, like global banks. You've seen both sides. What's I mean, like, what do you think is the biggest misconception traditional treasurers have about on-chain treasury management? And because now you are up with the Ton Foundation, how is Ton Foundation addressing this knowledge gap, or like,
I think there's a couple of things. Firstly, I've got to say, Soul Strategy, what a ticker symbol you guys have had. Like, what? I don't know how you managed to do that, but like, if you don't know, can I say it or no? I'll let you guys say it. Really, what is this ticker symbol?
We've had HODL since 2018.
What a great ticker symbol, HODL. You know, like if you're a crypto person, you know, go straight in. I love it. Honestly, it's brilliant. We also have our own strategy as well, our Ton strategy. I think it owns about 8.5% of the Ton. So you're getting these staking rewards. The key bit is that's going to get passed through, and then that's the whole purpose of that. You know, you're getting staking rewards. So for when I think the big misconception just in TradFi, talking about Bitcoin, talking about Solana, talking about Ton is, oh, how does it earn a yield? You know, I understand my my dividends, and I understand gold as well, but I don't understand how crypto is earning anything. So trying to explain them about the staking, that's a big thing. Trying to explain to them about custody. There's lots of stuff you've got to explain to them about, you know, the custody that they have, of the exposure that they have. And I think for us, the key thing that I'm really loving about, obviously, like the micro strategies and the Soul strategies, and now I say Ton strategy, is it's very easy for people to get involved. Like I can now put it in my pension without that big a leap. You know, I can just go in, I can select it in my pension. I'm as a Brit, I'm still not allowed to get ETFs or any other types of ETNs, or there's another name that they have as well, ETP, I think. I have no access. So I'm now not allowed to do it. So how can I have the exposure? I can buy the HODL. I can go get it from Soul Strategy and literally HODL. I can get the, you know, the Verb, which is going to be Ton Strategy, and Soul Strategy, which is going to be really key, I think. Got the ETFs. There's a lot more maturity in this whole market now. Back in like 10 years ago, like if I mentioned this, people just would not understand how this is going to be doing. So no, I'm really excited about this. I just think the longer we're around, the more we've been battle tested, you know, the more TradFi people will start researching it. But I've learned you can't ram it down people's throat. That's the worst thing. So I'm sure you guys all know about this. Trying to ram it down definitely does not work.
Thank you very much for sharing your perspective on that. You mentioned custody. It's definitely a topic I want to point out. But before I will just address like another topic that will be a good transition to the evolution of the custodies, the new custody models. Is talking about, let's say, the staking economy, or the risk adjusted rewards and the staking economics versus what traditional finance are used to. And if I may start with you, Parker, this time. I mean, like you personally operate a Solana validator with $70 million in delegated stakes, or if the number is not fully accurate, I mean, like depending on the pricing, etc. But approximately, like, let's say, nearly $100 million. So, like, if we walk through the real economics, let's say with Solana staking evolving around like 7-8%, almost 10%, depending on the MEV optimization, block reward, and all the things like that. So how do you think treasurers should think about the risk rewards equation compared to traditional fixed income at 4-5% rewards, depending, of course, on the inflation rate and all those things? What do you think?
Yeah, I mean, I think, you know, there's a number of yield opportunities kind of across the risk curve. So obviously, just natively staking, there's, you know, no risk really there. You layer on the validator piece, obviously also no real risk additional there. Once you get into DeFi strategies, there's some pretty risk minimized approaches to generating delta one, so full Solana exposure yield without running any kind of like trading strategies or what have you. And then beyond that, there's like a whole host of other things that can get you up to 15, 20, 30, 50% yields, which, you know, definitely have more risk involved there. So I think that's where the importance of, crypto native team really comes into play on how to execute these strategies, how to manage risk, a team that's been through, multiple bear markets, kind of seeing the fluctuations, see how liquidation cascades can occur and that kind of thing. And so I think ultimately that is the kind of the trade-off between an ETF, where if you're going to buy an ETF and let's say you can maybe generate 5% yield because ETFs aren't going to be able to fully stake, for example, have to maintain some liquidity, and then you're going to have your expense ratio in there. So, let's say 5%. Historically, we've generated a little bit north of 10% organic yield on our sole balance sheet. So this is across everything that we do. This is across our validators. We run validators for a number of other entities like Bonk and WIF. And then we do some stuff on chain. We've got our own LST. And so if we can generate 10% on a fairly low risk basis, based on what we do in house, and then the ETFs at 5%, there's a pretty solid delta there. And so I think, that's part of the value proposition of a more actively managed treasury position versus the ETF being a very passive position. And I think long term, across the board, digital assets belong in DATs, in operating companies with management teams that know what they're doing, rather than within ETFs. So I think what we're really undergoing here is kind of a transformation or a creation of a new type of vehicle. So just like, historically, you wouldn't say put real estate into an ETF. That's kind of silly, right? Put an apartment building into an ETF, you put it into a REIT, right, with an active management team. Maybe you put pipelines into an MLP structure because there's different tax advantages there. You don't just jam it into an ETF. I think what we've had today, or more recently, is people saying, well, we've got this ETF thing, so let's just put digital assets into it. Let's put some Bitcoin into it. That's the structure that we kind of have, and so let's just stick it in there. But I think what we're finding out is that that's actually not the best structure to hold, in most cases, these productive assets, Solana being a productive asset. And so I think these DATs are creating a new category of investment vehicle. And I think long-term, DATs will outperform ETFs for digital assets. And in hindsight, it'll look silly that we tried to jam, especially productive assets, into a passively managed ETF because it just doesn't make sense. So my thoughts on the topic.
Yeah, thank you very much for sharing. That's really interesting. And I have a question for you, Leah. That will also be a good transition to that. Is comparing like different operational model. And it's not a tricky question, not because we are P2P a validator also on that. So don't take it as a tricky question. But Sol Strategies recently acquired 3 validators for millions dollars and securing today nearly $500 million for further expansion. So beyond the staking yields, what do you think are the strategic advantages of owning versus delegating validator infrastructure?
Yeah, no, and that's what made our company the company it is today. And not just, acquiring the tech, but acquiring the people behind those validators. So I love this question and thank you. Yeah, in my perspective, here's the thing, while there's plenty of digital asset treasuries, plenty of DATs out there, as Parker mentioned, most are purely focused on the token appreciation. Most of the DATs are Bitcoin around the world. So we do take that different approach. And, we're not just betting on Sol the asset, to Parker's note about the different economics around it. We're betting on Solana, the network. And that's, I think, the distinction that is important that most people don't talk about is the network success actually drives the token value. And therefore, the massive revenue opportunity is as real world assets, tokenized securities, and other institutional use cases migrate on chain, we are able to capture that and capture significant value by running the infrastructure, by running those validators. You guys know this to a T, right? But it's betting on that belief, that growth, and being an active participant on ensuring that the token actually, sees the true success that it can, whether it's TON, blockchain, or Solana, or others. So to your point, with those acquisitions, we position ourselves as one of the top 20 validator operators across all of Solana. with over 3.6 million SOL delegated and also over 7,000 unique wallets. And I think we'd still consider ourselves a startup over here. So, that's bigger than even some of the centralized exchanges. And we now have a partnership with ARC and other public companies. So makes me really proud. But to your bigger question, what is that competitive moat that's then created by actually running your own validators or outsourcing outside of just the economics? So, and I do think that comes from operational excellence. Parker touched on that, and I agree with that. It's having a management team that truly knows what they're doing, that's been in the space, that knows how to run the tech. So hat tip to Max again, our CTO. But only 12% of our delegated SOL comes from our own treasury. 88% is actual customer, acquisition, retention, product execution. You guys at P2P know the importance and the difficulty of customer service around that, actually. So it's really not just around buy and holding. The reason behind the acquisitions is for those economics, but also, the importance of building the relationships, delivering reliable infrastructure, and continuously working with those sophisticated institutional clients we just spoke about that are moving in, and therefore that creates these defensible revenue streams that, can last through even bear markets by compounding that revenue by running the network. So in sum, it really is that the network success leads to revenue success. You know it at P2P, and that's what we're aiming for and angling for.
Thank you very much for sharing. And that's why I said it wasn't a tricky question. It was like a,
No.
a genuine one. So, yeah.
Can I ask a question? Whilst we've also got Leia Sura there. Obviously, you've got share price and your shares are out there. Do you know, like, who's buying it? Is it retail? Is it institution? Are you putting any emphasis on trying to get people to buy that as well? Or is it just like it's there and buy it? I'm really fascinated to know, especially, like from the. Sorry, Ali, I'm doing your job for the moment, but I'm like, it's great to have this opportunity to sort of ask.
This question was so valid. So, in this case, I'm gonna, Karen, asking you a question if you don't mind. Let's talk about like liquid staking. So the liquid staking markets. And sorry again if the numbers are like fairly accurate. That's because of price movements. But last time I checked, $86 billion in TVL, with products like Lido dominating with $40 billion at the moment, so around that. So how do you see the balance between maintaining liquidity with through liquid staking versus the control and potentially higher yields of direct staking? So my question here really is, what's optimal for different treasury sizes? Because all the companies will have like different strategies and risk appetite, etc. So what do you think is the best way to optimize that?
I can jump in on this one. So we have our own LST, and we use it as a collateral asset across DeFi. So we have partnerships with Camino, Drift, Exponent, RateX, Fragmetrics. I think the power of the LST is dependent on the network. So the reason that you've got such a high concentration on the LST side within Ethereum is the staking and unstaking procedures are, they take longer, right, to stake and unstake, and it's a little bit indeterminate. So if a bunch of people are trying to hit the exits, then like that exit queue stretches out. And so the LST is an incredibly powerful, desperately needed product. And it also is a function of, in the early days when Ethereum was transitioning, the LST was the only way to have any kind of liquidity for unstaking. On the Solana side, with 1 epoch unlocks, the needs for the LST are a little bit reduced. And then over time, as more of the lending protocols will take stake accounts directly as collateral, then the needs might be a little bit reduced. But it does still provide a unique solution from a liquidity perspective. Like instant intraday liquidity. That's why you saw the VanEck ETF launch with Jito Sol as the backend. because it allows them to stake more of the total ETF balances because they do have that liquidity. So I think it's a pretty important role. There's two really different types of LSTs to get to your yield point, Ali. There's the multi-validator LSTs. This would be like Jito or Marinade, some of the others, which are great, but they do come with a yield cost, right? And so you have the rebalancing component to it where some validators start underperforming. You got to swap those out. You take a 2 epoch drag, one to unstake, one to restake. And so you got to basically factor that into whatever the turnover is, percentage rebalancing is. That's a reduction to the yield. And then typically you have a fee baked in as well. Then you have what we use is a single validator LST. So it's just our validator. If you like our validator, great, you can use our LST. And so there's none of that rebalancing turnover. And so the yields are actually pretty high there. And then you can also use LSTs as a way to pay back block rewards. So LSTs today actually can generate much higher yield than native staking for external stakers because the validators will sometimes pay their block rewards into the LST as well. And so you can see this with the yield on some of the top performing LSTs. So kind of two different approaches there, and really the details do matter when you're selecting an LST.
Thank you very much indeed. That was a very good and interesting approach. Does anyone wants to add something on that before we move to the next topic?
I'm gonna just jump in for 1 second.
Yes,
Martin
please.
asked me a great question. Maybe I'll throw it to him first. And then I can answer it too. But how is Ton thinking about sales and going out there from an IR perspective? Since you're sitting in Europe, it's a different environment. To your point, ETPs are not allowed for retail. There's only certain platforms that allow only certain things. So it must be a different game. Parker and I sit in North America, so would love to learn from you how your team is thinking about IR.
Yeah, that's a great question. It's crazy to think under a year ago, you'd think America now you wouldn't be able to do it, and it's kind of now the land of the free again. It really is. It's completely changed where people I know were leaving America because they were scared about it, and now we're restrictive. Obviously the Ton Strat is a great way, and I don't work for Ton Strategy. Obviously, I work for the foundation, but it's a great way, to get exposure for Ton. I think a lot of people are like crypto. We have to think to the majority of people, even me. It's quite daunting. It really is. From the custody stuff to not your keys, not your crypto. All of this stuff is so scary, honestly. So obviously having these strategies, companies, even the ETFs is such an easy way. You buy it, you dump it. I didn't even realize because I bought an ETF back about 10 years ago, Bitcoin ETF. I didn't realize all the fees that you sort of get. You just don't even think about it. And you get 1%, 2% a year. They don't really talk about that for ETFs, that there are fees of ETFs that you have going there. So that's mounted up quite a lot. But look, for us, I think obviously we're stressing exactly what you're saying. It is really a network, and I always feel with Telegram and Ton, it's the way in. As we said, everyone in crypto should be on Telegram, not because they have to be, because it's the network effect. Where everyone's on Telegram because Ali's on Telegram, I'm on Telegram, Maria and P2P's on Telegram. Everyone around is on Telegram. If everyone was on Signal and crypto, I wouldn't be on Telegram. I'd be on Signal. That's just the network effect. So we basically are just stressing that Telegram, it's key. The mini apps, it's a new way of exploring crypto. And then I think the whole idea is it was called the open network, and that's what Ton stands for. There's other cryptos there, and I don't think we're denying that. Sol is irrelevant because I use Sol. I'm doing it that way. So I think it's slightly different. We do have a lot of the VCs. If you look at the strategy and you look at who's invested, we've got huge VCs that have invested, but also we're looking at a retail audience as well, because I think you can understand using Telegram and mini app. Oh, that's how I'm using crypto without using it. So yes.
So education. Yeah, I think
Yeah,
that's
it really is, and I think we've got all different types of users. You've got the the crypto advanced people, and I'm on Telegram, and you get a notification that like someone from my football team's joined. Like it goes like John, who I haven't spoken to in about 10 years. You go, Johnny, footballer. Go, oh, he's joined Telegram, and it's like, I wonder if he knows much about crypto. And I'm like, how do you know? It's like, oh, I'm just trying to flirt and have a look at that. So yeah, there's a huge range, and I think we need to sort of explain it. And I try to really not overwhelm people with a lot of this. So buy Ton, it does the stake, does all the hard work for you, for the strategy. And then I'm not going to preempt what's going on in this interview, but now I can now go to my ledger and stake Ton through P2P through using that. That's again a lot easier. So it's just cutting down all that friction. Now you can answer my question. I've given you enough time to you can Google it now and get all the stats.
I promise.
I know.
No. And then Parker, I'm curious your thoughts too, since you were NASDAQ listed and we had issues being Canadian first. No matter what, no ands or buts, we're all retail. And originally, when I took over as CEO, I've been on the board of Cypherpunk Holdings since 2021. But when I went into the CEO seat, we were an 11 Canadian cent stock. So we had an OTC listing, but you effectively, any institutions can't buy. You can't. Typically, it's around $2 mark, $2 US mark, where you need to be that you can really be allocated into the thematic ETFs. And that's a $7.8 billion market in the United States alone, right? So it's just like this massive market. It's success if you get into these blockchain thematic ETFs. When we got in, I was like, this is amazing. But so to your question, all retail, and you're working with legacy retail who is looking for those parabolic moves. And that's what we've seen with the DATs, but they want to keep seeing it. That's why traditionally investors invest in microcaps in Canada. You see a lot of companies in Canada on junior exchanges that are $2 million market caps. I mean, it's really a wild west over in Canada on the juniors. So like CSE or TSXV. So squarely retail. Now, what I was trying to do since the get-go was I hired someone from IR. I was the only full-time employee for a very long time. Until Max came in January. So it was kind of lonely out there, but trying to get, in the States, it's registered investment advisors in Canada, their mandates are looser. So trying to get institutions in, because I know that at one price point, and I thought it was $1 and it effectively was, retail would dump. I'd say, thank you, appreciate it. I'm out. I'm very happy and no reason to buy anymore. And that's exactly what happened. So it was just trying to hit the institutional market. But in the States, they still couldn't effectively buy. Again, just under the price point, not enough volume yet, just too many markers that, and we were on pink sheets. So we had to upgrade to QB or QX before we could even do that. So there's just like this little kid out there, like, hey, like I promise we'll be big one day without, forward-looking statements. So, we finally hit those markers and then we shifted entirely to the US. So hopefully we get that NASDAQ approval soon and we can finally, join Parker in the big leagues here. But it was all retail. Now, no matter what, though, I will stand by it. We can have lots of institutions that allocate to the ETFs or whatever, allocate us to the ETFs. It's a retail play. Anyone that's investing in us is retail. Across the spectrum, I think all DATs, because it does take that. Now, you're going to get fast money. You're seeing that with GSR, KKR, across the board. But for the most part, if you're looking at branding towards, who's the individual clients and making up that base from a spread perspective, it's definitely going to be retail. Now, the one thing I'll note, though, that I think is, that we all see, and then I'll totally be quiet. Sorry, Ellie. You got me excited. I mean, it's like 100% your fault, but, Parker, chime in, is what was really interesting for me at Valkyrie was that in 2023, our Bitcoin miners ETF was the best performing non-levered ETF in the US. And we looked around and we're like, why? ETH is out now. You have blended, cap weighted, leverage, like you have all these products. So why are are people buying our little tiny ETF, and we were a tiny team because we were going through an acquisition. And you look at the other ones, Marathon, CleanSpark, they were seeing so many flows. So what's interesting about the dads, and also just something that I always wanted to do, was there's just this comfort with picks and shovels, and that all of us can actually apply and think, you know, Parker, you did a great job of creating this SOL per share that actually gets modeled for these analysts. But before then, right, for spot, to your point, Martin, and also Parker, like, you know, you have to be very comfortable with how to allocate, and investment advisors were never that comfortable to a crypto ETF, right? And they still, Martin, actually, most of the crypto ETFs still aren't on the platforms, even IBIT, right? Vanguard won't invest. Like, even if it's BlackRock, it's still not on. So now we all are here with picks and shovels where, you know, it's a bit different for just a pure dad, but if you're running a validator, you can actually point to revenue and, you know, what you're up to. And I think that that's just, you know, very powerful, and that excites me. All right, I'm done.
I was going to say,
love it.
I was just going to say, just before you get in, Parker, is your aim for companies to publicly say I've got SOL strategies on their balance sheet? Is that's what would? Yeah.
Success for us, in my opinion, is running a great shop. But from an IR perspective, if we can have a meaningful allocation in my backyard of, you know, of blockchain thematics, and in Europe, they're bigger. So to your point, you probably bought CoinShares as XBT. You know, they've been out for a long time, and the thematics are big too. I think if any of our companies get a meaningful share, you know, these are very sophisticated, actively managed, you know, ETFs, the thematic ones. So I'd call that a success for all of us.
I think a great successful Lululemon will say that they've got SOL strategies on their balance sheet. That would be great. A great Canadian. Yes.
Wonderful.
Well, other yoga brands are out there, but I live in Lululemon. If you don't know what Lululemon is and you do yoga, like, again, it's like being in crypto and not in Telegram at all. So yeah, there we go. Sorry,
Martin, Mr. Lululemon.
I'm a yoga teacher, so basically, I either live in if you're in crypto, you live in either crypto swag or Lululemon stuff. That is it. That's all I have. I've got. Whenever I'm invited to a wedding, I'm like, oh no, can I wear my crypto swag and Lululemon jacket?
But do you
great.
have the Lulu suits? You know, like the formal wear, or
I do. Ali's like, what on earth is this Lululemon?
Well,
like,
This is
can
evolved.
do they?
No,
what's the ticker symbol? Can I get this meme? It's like, no, don't worry, Ali. It's fine.
That's okay. But you know, I mean, like back in the days, I mean, like even before we were born, I mean, like you think about like militaries or pilots or etc. Back at the time, their uniform was something that they were quite proud to wear. Like in weddings, people can just come as a pilot or as a military. Perhaps in crypto soon, people will come with their crypto swag, and this will be like a sign of respect. Exactly. Yeah. So I'm going nowhere with my P2P shirt neither.
Yeah,
so,
I'm definitely not going to be rocking up at a wedding in my my Ton t-shirt. But I love the idea. Maybe SOL strategies could go down, but definitely don't think I'll get away with the. Sorry, Parker, man, you've been ready to go, and then like,
Yes.
I'm waiting. I'm ready.
Like,
I'm ready.
You've been upstaged by Lululemon. There we go.
No, definitely SOL per share, and you know, would love to hear more on that front too, and how you thought about it.
Yeah. I want to bring another topic. I mean, like just
Parker, you're being upstaged again. I was like gagging.
It's over and over.
Ali, let Parker speak. It's like,
yeah, I'll give you a special one. And you know, we discussed about like you know, like treasury strategies. What do you think about multi-chain strategies and or cross-chain opportunities? I mean, like today we talk about like Solana. We have someone from Ton Foundation, and recently BlackRock's, because we mentioned them, they published that their build funds allocates basically nearly 75% to Ethereum and only like less than 10% to other chains, etc. So what do you think would be the optimal multi-chain mix? And let's be a bit more provocative on that point. What would you say to funds to kind of convince them to go higher on Solana allocations?
Yeah, I'll answer that one real quickly and then go back to the other question.
Okay, let's do that.
So I think for vehicles, operating companies in particular, they should be single asset. If I'm an investor and I want exposure to TON, I'm going to buy the TON vehicle. And if I want to buy exposure to Solana, I'm going to buy the Solana vehicle. I think multi-asset vehicles are stupid unless there's some kind of synergy between the assets. If you want multi-asset exposure, that's what an ETF for is, over the top, or you can just build the allocation yourself. So I think multi-asset for these vehicles for DATs don't really make sense. I think developing that expertise in a given network is the way to go. And that kind of gets to the prior question of the investor base here. It's really interesting. Well, so to the retail question, I think retail, it's a bit of a, historically it's been seen as like, oh, you're a widely held retail stock, like you're not serious, you can't convince the institutions. But actually, crypto has been a story of retail front running the institutions since 2009, right? It's always been the case that retail front runs the institutions in this industry. And if you look at MicroStrategy's holdings, it's like more than 50% retail held. It is widely retail held. And so I don't think it's a bad thing that, these companies are widely retail held. Now, in terms of the institutional adoption, I think we've got a long way to go. I mean, again, you look at MicroStrategy as the bellwether, and they're still over 50% retail adoption or retail holders. And so, when we talk to a lot of these institutions, we've talked to a lot of funds, big hedge funds, giant mutual funds, all over the world. In the US, I did an Asia tour in Japan and Hong Kong. And I mean, these guys, like, we're spending all this time talking about like what Solana is, or I've heard people call it Solana, Solarium, Soluna. Like, they don't even know the name of this thing, right? But what's very interesting is that they say, oh, I understand Bitcoin because I've listened to Michael Saylor. And so I think, Michael Saylor spent many years, the entire last bear market, going on all the podcasts, going on TVs, just boom, 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 hammering the point home about what Bitcoin is. And so I think there's a bit of a road ahead of us to do the same for Solana and other assets. But I think as there is a publicly traded vehicle for investors to buy, there's something that they can tangibly latch onto. They can look at, quarterly earnings, they can look at Bloomberg, they look at all things. That story will start to resonate. And it won't be the first time that they hear it, that they buy, but the 7th or 10th or something time, they'll start to allocate. And you see that with MicroStrategy, where, like, say, Norges Bank, the Norwegian Sovereign Wealth Fund is starting to buy, and many of the large US-based pensions are starting to buy. I think you'll start to see that here, but it's absolutely going to take some time. And just because you're NASDAQ listed or you reach some market cap or share price or liquidity threshold, that is not the unlock. It is that education piece, and it's a bit of a slowly then suddenly type story there, where you do have to just chop a lot of wood to educate people over and over and over again, and then they'll kind of step in. And it candidly probably won't be until the next bull market that institutions really start to step in size. So you got to be here for the long haul and just repeating the message over and over and over again.
Sure. The one question I get asked about, obviously, MicroStrategy over the other ones is that obviously MicroStrategy is a business as well. So they actually are earning some funds, it's still a reasonable amount for what it is, compared to obviously what it is. But obviously that so, like, is there much of a difference there than, the other, strategy companies out there, just because they actually do have some revenue there that's supporting it?
I mean, look, that business was a $4 billion business, and now they're a $100 billion market cap. So it's like 4% of the story. I think it's actually a bit of a drag. The problem on the Bitcoin side is, like, you need to develop an operating business to be an operating company. And so you got to have something. On the Solana side, it's very easy to have an operating business. We got validators, you can do, other things, DeFi stuff, run validators for other people, get external delegation, whatever. Boom, that's your business. So you can be an actual pure play thing. And so I think the story is a little bit more clear on the Solana side because it's 100% focused on Solana. It's not this, like, then they have this other data business thing. Yeah.
I was just hoping that Solana strategy was going to go into yoga, And then I could be one of the teachers out there with the Lululemon sponsorship. But the one thing, you know, like the one thing that really interested me, because I was chatting to some very, very big companies that we might have mentioned anywhere that sort of data aggregates them into baskets. They're saying baskets of these just really aren't popular. There's no appetite for, and they were actually thinking this was going to be huge. So they put a lot of resources in going like, you know, like get Sol strategies, Ton strat, micro strategy. People just weren't bothering with them. Like, and it wasn't like from lack of pushing it. So what you know, I'd be really interested actually, you guys, like why you feel that people want to go you know, like I'm going to go MicroStrategy, I'm going to go Sol strategy, I'm going to go rather than I rather buy Barty. Because for me, I thought it's more logical. It's like, right, I'm going to buy some, let that sort of go there.
I'll jump in. Oh, go for it, Parker.
I was going to say, and then, yeah, I'll be quick here. I think it's the nature of crypto where people have their community, right? That's kind of tribal. And so, like, if you're a Bitcoin guy, you probably want to hold Bitcoin. And so, like, I mean, Coinbase tried this a long time ago with their, like, baskets and stuff.
Yeah.
Like, nobody cares. People like their one or two assets for the most part, is my view.
Yeah, I actually disagree. But also backing it up, you know, I think most people forget that from just a purely financial perspective, retail means self-allocated wealth. And institutional means, you know, just like boring finance means discretionary. So it's what's interesting about crypto, and I agree with what you were talking about on that, Parker, is that we've always had a lot of power, even though it's self-allocated wealth, right? Individuals have had a lot of money, a lot of power, and that's where, you know, those dynamics have just been so interesting over the years to see. So yes, the Bitcoin, I'd say I would agree, is really the first asset where retail came in before institutions, and we came in a meaningful way, even if we were chipping away at it at the beginning. I think that, Martin, you will see the importance of those baskets very soon. And in the States, you know, again, we've been kind of maybe pooping on ETFs, but at the same time, obviously, I like them a little bit. And mainly because they're allowed on more platforms, especially, you know, if it's BlackRock, et cetera, because they're usually the preferred vehicle of choice because of their tax advantages for advisors. And especially if advisors, and you're looking at, you had once mentioned 401ks, you know, you can finally in the US also invest in crypto in your retirement accounts. And that's a $7 trillion addressable market. So they typically do invest in ETFs because of those tax advantages and it being in a retirement setting. You have products like BitW. So Bitwise has done a great job of packaging multi-coin strategies into an ETF. But before we get our equities packaged into an ETF, I think that that's going to be more delayed because it's a extra form of education versus let me just buy BitW that has Ton and Solana. But I do think we're going to get there when the yield is understood and it's not just scary. Because also one thing I think people should remember is you can actually be too successful for an institutional portfolio and you need to downsize. So there's risk parameters on both sides. But if one equity blasts past, and I think Parker has a background in finance, blasts past, you know, their parameter for too much growth, you actually have to keep downsizing. So it's interesting, but I think the institutions need to figure out how to, you know, evaluate us first. Then the package, I think, will get more interesting. But I think that that'll definitely be the future. And you'll probably see thematic Bitcoin DATs, you know, and stuff like that. And I think I would love to buy that.
So you're basically saying if Sol strategy gets too big, you're going to buy some gold.
Yeah. You're gonna ask a big question about buying gold? Get out of here, Martin.
Martin and Peter Schiff are buds.
Oh, the heyday. Well, apologies.
That's brilliant.
Alex.
That's brilliant. Yeah, no, thank you very much for all your thoughts. I mean, like, there is so many other topics we can speak with. We only have an hour. I wish we can have 3 more because typically you have like so many things to share. So let's try to think what could be interesting for our audience also. Perhaps we can discuss about the market cycles. I mean, like, some forward-looking strategies. I mean, like, I understand that. I mean, like, all of you, I mean, like me included, had the chance to leave 1, 2, or perhaps more cycles in the past. And so I guess we can all agree that we are potentially entering in a new cycle and a completely new one, with Bitcoin ETFs holding $50+ billion, regulatory clarity improving, perhaps also the infrastructure being like a bit more mature. We didn't really talk about like custody, but that would be for another time. I mean, like with that said, how do you think treasurers should position themselves for the next 24 months? And what's interesting, I mean, like, what do you think could go wrong today?
Martin, you've talked the least.
I thought I've made you guys talk the most, to be honest.
Well, this one is definitely a tricky one. So sorry,
like, I love to throw me under the bus. Why don't you? Okay, there, throw me under the bus. I think Ali's spoken the least, but look, I think it's always a tricky one. Like with this, I'm not one of these that believes it's not going to be a cycle. You know, even with traditional finance, we see cycles. I do feel, and I'm always saying this, like I think it's a trickier one, but I feel there's less boots maybe this, in next cycle, because look, there's so many things that are starting to happen that, like the ETFs and governments starting to have that as their, backed strategies. And I think the issue probably could be that obviously people getting in at the wrong point of the cycle, like I'm the best person to sort of copy reverse trading all my stuff, as I said, like always buying at the top and then I'm still not selling. I think that's probably the big issue of just sort of committing quite quickly. What the saying is like, I always sell my stocks when the shoe shiner gives me stock tips and stuff like that. So, realistically, hopefully now is the time that you look back and go, oh, the 28th of August, why didn't I start getting it rather than, February next year? So yeah, I don't believe in a super cycle. I don't believe in it not a cycle. I just think, we're going to get a big blow up and then we'll cool off quite a bit, but probably not come down to sort of levels of what we're, the doom and glooms of what would have been like all-time highs a couple of years ago. So yeah.
Yeah, we talk about this a lot internally from a macro perspective. Our whole team is ex-Kraken, so we've watched a lot of cycles. I guess my kind of biggest point of uncertainty is how deep the bear market will go, right? I mean, I think we've probably got more legs here in this bull market. But with institutionals really entering the space in size, they're buying Bitcoin, they're starting to explore other assets. Like, do we have a situation where we see 80% retracement in Solana again? I mean, I don't know. It's certainly possible, but absent some other major liquidity crisis, I mean, we've not really had like a plain vanilla just reduction in liquidity. It's always been some kind of major blow up, whether that was FTX, Mt. Gox, the Chinese miners turning off in 2018. I don't know. So maybe we're due for just plain vanilla pullback where like things are down 30-40%, not like 80%. Which means like, is it a bear market or is it just like, another day in crypto? I don't know.
Yeah, I would agree with that. I would also add, I think the two things I'm most scared of is nefarious operators and quick money with the wrong intentions. If there's already 293 DATs and they're typically invested in for a parabolic move, I'm, scared of what comes next. And to, I think, an earlier point that Martin or Parker made of it's only retail that gets hurt on that. You have very specific lockup periods and structures are very specific. And, institutional investors and fast money know what they're doing. We don't see behind the screen. So I think that there's only so many times where retail can be hurt. That's appropriate. It's never appropriate, but that you will start to see a complete rotation out. And a fear of any other DATs in the space. And I think that would be rightfully so. I think that will definitely come. I just hope that I hope it doesn't happen and I hope I'm wrong. But I would also agree, and having seen a lot of bear markets as well, and built businesses through them, and that's always really tough. I mean, just to that point again, I think it's that you need to start looking towards blockchain and blockchains, as well as operators who actually are using and know what they're building on. But that's also why, having that operations under the hood, and we have like a tiered system of how we see DATs, and we call ourselves a DAT plus with the operating business. But it's by having that operating business that we believe we can see through any bear market, because you're generating revenue from network fees regardless of token price volatility. So I think you'll continue to see that progression. If a bear market comes, hopefully we just never see it and everything's different this time around. But we will. And I think that DAT management will start to understand the importance of that and maybe start shifting into more operations, even if it's beyond the blockchain that they're thinking of. But I hope it's within the same blockchain ecosystem. But we'll look for those regulatory wildcards and black swans and all those different things. And I think, we have good management teams here, so we can hedge.
I'm going to be very interested in an oversaturation as well. I already know of 4 other people that are doing a ton strategy or have been saying it. So it'd be very interesting if there's like another 40 or 50 sort of strategies out there of like, oh, which is which, and like then it's a battle, and then it's a trickier one there. At least you've got HODL. That's your that's your best IP there.
No, Martin, we reserved on NASDAQ stake. I don't know which one's better. We got HODL and stake. Those are good ones. It's all about the ticker game.
There we go. Yeah, no, it's brilliant.
That is brilliant. Thank you very much for all of you for sharing your perspective. Unfortunately, I'm just checking the time and it's already 59 minutes. So let's try to conclude this discussion, and definitely for our audience that wants to learn more about that. I mean, there is always the possibility to stay in touch and to discuss on another occasion. But to conclude, can I ask each of you, not of course to speak to the audience, not to give advice, but in one sentence, like what would be your key message for institutional treasurer or people that are interested in going through, that are watching us today? What would be your message for them?
I'll go first. If you're an institution and you want to, you should explore the ecosystem. I think it'd be really good to sort of play around with it and sort of see what you're actually investing in and what you're doing. It's not that tricky, people's nephews probably could be teaching them, how to do that. Get a wallet, sort of see why, people are so bullish on Solana or Ton or Telegram like that. See the mini apps, what you're doing, because so many people are investing and they've got no idea. And then that gives you, for me, in the end of the day, I need more people using Ton. I need more users. I need more apps. I need more real things going on to actually give Ton a use on there. So I'd say get involved.
Maybe I'll follow up with that, because I agree with it completely, wholeheartedly. And so just adding to it, blockchains live and die by their community. So maybe the extension beyond that is go to the conferences, join the Discords, learn and feel out how the community is doing. And if you start feeling it tapering off, be cautious. But by adding and actually trying to help communities grow, that's where you're going to see token appreciation in the future as well. It follows suit. So, staying part of the community.
Yeah, I'll just build on those two. I think, ultimately this is a space that as an institutional investor, you can't just ignore. It's not going away. This is not some kind of fax machine versus internet type moment. Or I guess it is, this is the future of the internet, right? And so you can't just hope this will eventually go away or it'll stay niche forever. I think, Andreessen's software is eating the world. I think crypto is eating finance and everything else. And if you don't get up to speed and, climb the knowledge ladder, it's going to be hard to catch up. And so take a look at this space, dig in, understand the difference between Bitcoin and Solana and Ton and these others, because there's not a lot of time to waste. This space is growing very fast.
Thank you. Thank you very much, all of you. What an incredible discussions. I mean, I have the feeling that we could have stayed for hours. but we're gonna wrap up here. A huge thank you to you all, Leah, Parker, Martin, for sharing your insights, and let's thank everyone that joined us today behind their screen. And yeah, let's conclude that if you believe that the future of finance is on chain, then the conversation doesn't stop. Let's stay connected, let's stay curious, and more importantly, let's keep building together. Thank you, everyone. And yeah, I really hope that that we'll have more of those conversations very soon. Thank you again, and have a great day, everyone.
Thank you.
Yeah.